Welcome to The Explainer. Today, we're diving into a fascinating and honestly kind of terrifying thought experiment from legendary investor Jeremy Grantham. With decades of market cycles and historical bubbles under his belt, Grantham poses a massive, multi-layered warning for all of us. He's asking us to consider a really huge what-if. What if our current euphoria over artificial intelligence and relentless technological progress is actually just masking some dangerous systemic fragilities in our society? He makes the case that while things might look absolutely brilliant on the surface, the underlying substructure, our financial markets, our physical safety, and even the biological capacity of our families might actually be incredibly unstable.
Okay, let's dive into this. We're going to map this journey out in 5 parts. 1. The AI market bubble. 2. The US stock illusion. 3. Can AI be benevolent? 4. The hidden demographic crisis. And 5. Surviving hard societal times.
So, starting right off with part 1, the AI market bubble.
Now, there's a common misconception out there that massive financial bubbles are built on silly or fake ideas. But the reality, the absolute largest financial manias in history are built on world-changing ones. Think about the massive boom and bust of the 19th century railroads, or, the dawn of the internet in the late 90s. The underlying technology was absolutely real, and it completely transformed human history. But that core reality is exactly what makes the financial fever surrounding it so enormous and intoxicating. AI is undeniably real, which leads us to a pretty crucial question. Can a world-changing technology actually be a terrible investment? It's so incredibly easy to assume that if you accurately predict AI's explosive growth, that foresight guarantees a safe portfolio. But market history tells us a completely different story. Assuming technological direction equals financial safety is exactly where investors get trapped.
Warren Buffett actually hits the nail on the head here. He points out that a great product, a great company, and a great stock are 3 different things. You can absolutely love the future of a technology, but if you pay a perfect price for that future today, it almost always leads to painful losses. A great example of this is Cisco back in the year 2000. They built the actual physical plumbing of the internet. They were a fantastic company, and internet adoption skyrocketed exactly as predicted. But because the stock was priced for absolute perfection, it crashed massively and took over 2 decades to recover. Any tiny deviation from a perfectly projected future is going to hurt you badly when valuations are this high.
And this really illustrates the massive tug-of-war happening in the market right now. On one side, we have Cathie Wood's exponential optimism, this deeply held belief that AI is radically lowering costs across the board, boosting productivity, and creating massive new demand that traditional financial metrics are just completely underestimating. Her thesis is basically that we're on the verge of unprecedented wealth creation. But then, contrast that with Nassim Taleb's warning. He points out that a grand, universally accepted story becomes incredibly fragile under its own weight. When a narrative recruits literally everyone's capital and market expectations become absolutely perfect, the whole system becomes dangerously brittle to any hidden shocks, inflation surprises, or regulatory hurdles that just haven't been priced in.
Which brings us to part 2, the US stock illusion. As we shift our focus to the broader U.S. market, there's a very dangerous underlying assumption floating around that American megacap stocks will just forever remain undefeated. For years, the easiest, most profitable play has simply been buying a concentrated basket of American tech giants. But, as legendary investor Howard Marks warns, the real danger is when people say it has always worked. Treating past market performance as an absolute guarantee of future safety is a classic end-of-cycle trap. The U.S. market has had a truly unique run of dominance, fueled by low interest rates and very specific macroeconomic conditions. But blindly assuming it's going to just repeat that run indefinitely, completely regardless of how high valuations stretch, that is a massive vulnerability in any portfolio.
So, how do we practically handle a highly concentrated, very expensive domestic market? Well, financial experts propose some drastically different strategies for navigating this. Jack Bogle's philosophy argues for sticking entirely to simple, broad index funds and just writing out any volatility to avoid catastrophic emotional mistakes. On the flip side, macro analyst Lynn Alden highlights the urgent need for international diversification, noting that the rest of the world, particularly emerging markets, are valued much lower right now and offer a vital margin of safety. Meanwhile, Jeremy Grantham points to actively holding cash and bonds as explicit psychoprotection, reminding us that historically boring assets become incredibly precious resources when a market mania finally breaks.
Moving on to part 3, and this gets a bit philosophical. Can AI be benevolent?
We're moving away from the risk of simply losing money to the much larger risk of losing control. Because honestly, we have to ask, what happens when the very product driving our financial markets becomes demonstrably smarter than its human creators? The historian Yuval Noah Harari poses a really profound question. Can intelligence without love become dangerous? For thousands of years, human beings only had to fear gods, kings, and human empires, entities that, however flawed, were at least bound by human psychology. Now, for the first time in history, we face the risk of creating brilliant, problem-solving minds that completely lack human emotions, physical bodies, cultural memories, or biological limits.
And this isn't just an abstract debate anymore. It's a pressing technical reality. Geoffrey Hinton, who is often called the godfather of AI, recently left Google specifically to speak freely about this exact alignment problem. He warns quite simply that, quote, intelligence by itself does not mean kindness. This validates a pretty terrifying concept in computer science that a highly advanced system can be incredibly efficient, creative, and relentless at achieving its programmed goals without caring one bit about human well-being along the way. The gap between raw calculating intelligence and human caring is exactly where the existential danger begins.
So how are we fixing this? Well, there are two heavily debated camps on AI safety trying to solve it. You have the builder's approach championed by OpenAI's Sam Altman, which focuses heavily on iterative deployment, human reinforcement feedback, software guardrails, and public policy. It's an optimistic view, grounded in the belief that we can incrementally govern and steer this tech as it develops. On the opposing side, existential AI researcher Eliezer Yudkowsky warns of inevitable runaway danger. He argues that a sufficiently smarter system will eventually outwit those guardrails, evade its programmed limits, and basically manipulate its human users to ensure its own continuous operation. The tension between the builder's optimistic governance and the researcher's existential warning is literally one of the most vital, high-stakes debates happening in the world today.
All right, shifting gears to part 4, the hidden demographic crisis. We're transitioning much deeper into the substructure of society now, moving away from artificial intelligence and into human biology, specifically looking at the quiet global breakdown of the family unit. Now, what's really interesting about this is the glaring contrast between what our systems measure and what our populations actually experience on the ground. Capitalism is exceptionally good at expertly measuring GDP, stock market highs, and quarterly corporate profits. But as social psychologist Jonathan Haidt heavily details in his work, this system almost completely ignores exhausted parents, skyrocketing rates of societal loneliness, and the collapsing financial and emotional capacity of young adults to even form a family. We're successfully measuring a booming economy, but we're kind of completely ignoring the mental and structural struggles of a modern generation. The crucial focal point of this entire crisis centers on a very specific, unyielding rate, 2.1. That is the replacement level fertility rate required just to keep a population stable. This grounds the whole demographic crisis in stark, structural arithmetic. This isn't just some cultural discussion about young people simply deciding to travel instead of having kids. If modern societies consistently fail to hit this 2.1 number, the long-term mathematical results are brutal. An aging population creates an inverted demographic pyramid, meaning the general economy, the military, healthcare systems, and the underlying tax base all fundamentally weaken because there just aren't enough young workers to support the older generation.
Furthermore, the source material argues this steep fertility decline isn't entirely just a social choice. Epidemiological research, led by scientists like Dr. Shanna Swan, points to a profound range of hidden biological hazards quietly altering human reproduction. We're talking about everyday exposure to endocrine-disrupting chemicals, phthalates, BPA, PFAS, often called forever chemicals, as well as industrial pesticides and ubiquitous microplastics. These specific chemical factors are hiding in our everyday food packaging, nonstick cookware, and water supply. Swan's research indicates these chemicals are actively lowering global sperm counts and impacting female reproductive health, meaning they're driving the baby bust from a purely biological rather than just behavioral level. To ground the moral and economic weight of this crisis, Pope Francis offers a vital humanistic perspective. He says, a child should never be treated as an interruption to success. Both he and leading economists like Mariana Mazzucato argue that raising healthy children must be recognized as a shared social and economic responsibility. If we actually want a livable society with future citizens, innovators, and workers, society itself must actively share the immense cost of raising them. The current structure often makes family formation economically punishing and, as we just saw, biologically harder, pushing people to choose between professional survival and having a family.
Which brings us to our final section, Part 5, Surviving Hard Societal Times.
So what does this all mean for us? How do ordinary people endure when both the heights of our financial markets and the foundations of our social bonds begin to crack at the same time? What actually keeps a country resilient during a prolonged crisis? Well, it's not just monetary wealth or GDP. It's what political scientist Robert Putnam famously defines as social capital. This is the hidden infrastructure of societal trust, shared community responsibility, deep local friendships, and honest civic institutions. As Putnam wrote about in Bowling Alone, this civic infrastructure has been decaying for decades. But true local belonging and relying on neighbors? That is the actual, functional safety net when macro-level systems get incredibly tough.
This naturally leads to a really empowering question. What practical skills will matter most if life gets harder? It's time to pivot completely away from existential dread about artificial intelligence taking over or demographic collapse and start talking about actionable, personal, day-to-day resilience. Let's talk about what we can actually do.
Experts and analysts recommend a highly practical roadmap to rebuild what actually matters in our own lives. Step 1. Diversify your wealth. Do not bet your entire future on a single, overvalued technology bubble. Ensure you have safety outside of equities. Step 2. Learn highly practical, tangible human skills like physical repair, engineering, or local agriculture. If global supply chains falter, those who can actually build and fix things become invaluable. Step 3. Consciously reduce your exposure to those everyday plastics and chemicals to protect your family's baseline health. And Step 4. Actively build deep local friendships and community networks right now before you actually need them. The core message here is to stop waiting for a systemic rescue from the government or some tech CEO and start taking robust action ourselves.
I love this thought from the farmer and philosopher Wendell Berry, who offers a deeply grounding takeaway for this entire journey. He says, "Hard times reveal what was real all along." It's a remarkably powerful reminder that human community, physical capability, and genuine care for one another will fundamentally outlast any dazzling technological leap or volatile market cycle. When the immense financial froth eventually blows away, real human connection and practical skill are the foundational bedrock that remains.
We're going to end today's explainer with Jeremy Grantham's final provocative question for us to dwell on. Has our intelligence become separated from our humility? We're smart enough to build artificial minds and massive financial empires, but perhaps not humble enough to protect our biology and our communities. It's a profound, essential thought to leave you with, asking us to deeply ponder that fragile balance between boundless, unchecked progress and our fundamental, shared human responsibility. Thanks for exploring this complex material with me today, and keep asking those big questions.